Welcome to the WealthKode Blockchain Knowledge Series, and in this episode, we'll be talking about Polkadot. Remember to follow and subscribe to our pages for all future episodes being released on a regular basis. And of course, if you'd like us to delve deeper into any of your favourite blockchains, cryptos or digital assets for future episodes, or you have any questions at all, feel free to drop a comment. So let's get started. Polkadot is this huge, mysterious beast of the blockchain world, a sprawling ecosystem of interconnected networks, known as parachains. It's been variously described as an Ethereum killer, the future of Web3, and the new home of DeFi. But how accurate are these claims? How do parachains work? And is Polkadot really the next big thing in crypto? Or just another overhyped blockchain destined to go the same way as EOS? In this explainer, we'll try to answer as many of these questions as possible. Along the way, we'll dive into the workings of Polkadot to determine what makes it tick and what makes it so different to anything that's come before, including Ethereum. First though, let's start with the basics. What is Polkadot? Polkadot is a multi-chain network that's built using a framework called Substrate. The idea with Polkadot is that information, be it a message, a token, or a financial transaction, can be transmitted anywhere else on its network of parachains. This is what's meant by Polkadot being interoperable. Polkadot aims to become the backbone of the decentralized web, supporting public and private chains, applications, enterprise platforms, and basically anything else that can run on a blockchain. IoT, DeFi, supply chain, insurance. You name it, Polkadot promises to host it. Now this ability isn't unique to Polkadot, of course, but anyone can do the same on Ethereum, theoretically. But as we all know, this ability comes at a high price on Ethereum. Due to its low throughput, ETH can only process around 15 transactions per second. The network is heavily congested and fees routinely now run to $100 or more. For Web3 applications, DeFi and enterprises, that simply won't work. Polkadot's solution is to split its protocol into segments, or shards, which can be processed in parallel. This allows Polkadot to render thousands of transactions per second and for users to send transactions at near zero cost. DOT is the name of Polkadot's native currency. It's used for payments, participating in governance, staking, network fees, and for bonding. For example, a project wishing to create a Polkadot parachain might bond DOT tokens as a guarantee. Cryptocurrencies like Bitcoin have a fixed supply, but DOT is a little different. It actually doesn't have a cap. This doesn't mean that Polkadot can endlessly print more tokens though. Coded into the protocol is a dynamic model for adjusting the issuance of DOT, based on the number of users staking on the network. In any given year, the supply of DOT cannot increase by more than 10%. Polkadot, the backstory. Before we dive into the inner workings of the Polkadot network, let's take a moment to look back on how it all began. Polkadot is the leading project of the Web3 Foundation and was co-founded by Gavin Wood. Wood is famed for being one of the original co-founders of Ethereum and was involved in the development of Ethereum's Solidity programming language. Wood co-founded Polkadot with Thiel Fellow, Robert Habermeer and Peter Saban, and also serves as Technology Director of the Web3 Foundation. 1 year after the Polkadot white paper was published in 2016, the project raised $145 million in its token sale, before launching its mainnet in May 2020. Since then, Polkadot has been gradually building out its network, while also decentralizing it and moving governance away from the sole control of the Web3 Foundation. In June last year, Polkadot launched its second nominated proof of stake, NPOS phase, by which point it had a sufficiently decentralized set of validators to oversee the network. Around the same time, network governance passed to DOT token holders. The DOT token was also redenominated last summer by a factor of 100 to 1 to make DOT easier to reconcile when calculating transactions. Despite its dollar value being slashed by 100-fold, DOT has been on a steady climb ever since, and today ranks as a top 5 cryptocurrency by market cap. How Polkadot works. Polkadot's central relay chain can be likened to a freeway, with all the other chains that connect to it serving as minor roads that feed traffic on and off this main route. Each of these smaller networks that lead to the relay chain are known as parachains. Para as in parallel. So described because the activity that's taking place on these secondary networks can be processed simultaneously to that of the relay chain. This ensures that Polkadot's central highway doesn't get clogged down with trivial transactions, which can be safely recorded on parachains before the final state is broadcast to the main chain. Now, normally when you use a sidechain, you compromise on security because it costs a lot to secure a blockchain, whether that's through miners providing proof of work or stakers locking up their assets to ensure that the protocol's rules are upheld. What's cool with Polkadot is that the security model of the relay chain extends to the entire network of parachains. This means that small projects don't have to be lumped with huge overheads for securing their network. The relay chain takes care of that for them. The relay chain can be thought of as layer 0. It handles network consensus, security, and cross-chain interoperability. With the relay chain doing the heavy lifting, it falls to the parachains to handle the everyday transactions, payments, staking, messaging, that kind of stuff. It's a bit like a factory production line, with different divisions specializing in different tasks. The potential use cases for parachains can differ greatly, and thus, so does their architecture. For instance, if you're building a parachain for a high-frequency trading platform, speed will be of the essence, so you'll optimize accordingly. If you're building a payment platform that's going to process a high volume of payments per second, you'll optimize for throughput. That's one of the cool things about parachains. They can be easily customized, or developers can pick and mix from pre-built components, allowing them to get up and running quickly. Aside from the relay chain and parachains, there are a couple of other key components of Polkadot we should touch upon. The first of these is parathreads, which are an alternative to parachains. Parathreads can temporarily join the Polkadot network on a block-by-block basis. But why would anyone want to do that? Well, it means that parathreads can tap into Polkadot's security model without needing to lease a permanent parachain slot. Essentially, you get all the benefits of using blockchain as and when required, but aren't tied into maintaining a permanent connection. Finally, we have bridges, which do exactly what it sounds like. They support interoperability by enabling parachains to trustlessly communicate with external blockchains. Polkadot Today. The next phase of Polkadot's development is now underway. This involves auctioning off slots for parachains and introducing features such as cross-chain message passing. Although Polkadot has been billed as an Ethereum killer, it's actually not designed to compete directly against other smart contract networks. Rather, it complements them by extending their capabilities, making it easier for value to flow freely cross-chain. For example, Polkadot project Moonbeam has developed technology for transferring assets and dApps between Ethereum and Polkadot by providing compatibility with the EVM. This means that Ethereum assets and applications can be represented on the Polkadot chain. It also means that DeFi users will be able to use a web wallet such as MetaMask to interact on both chains. More than 350 projects are now building on Polkadot, creating things like developer tooling, prediction markets, decentralized finance applications, oracles, digital collectibles, NFTs, and gaming. So what's the verdict on Polkadot? Polkadot is one of the most misunderstood next-generation blockchains. Partly that's because its ecosystem is so large that there's a lot to learn, but also because its design is so different from anything that's gone before, not least Ethereum. This misunderstanding is heightened by the fact that Polkadot is so new. Most people haven't had a chance to play about with it yet and see what it's capable of. The paint is still wet on Polkadot, so to speak. Over the next few months, you'll see the first major projects launching on Polkadot, including platforms like Polkastarter, Polkadex, and Refinance. When these projects come on stream and you can actually start interacting with the Polkadot network, trading, saving, yield farming, gaming, whatever it may be, it will all click into place. Polkadot has been a long time coming, and while it's not quite ready for prime time, it's getting close. The spate of development on Polkadot, both by the Web3 Foundation and by third-party projects, is breathtaking. 5 years is a lifetime in crypto, and blockchain technology has evolved greatly since the Polkadot white paper was first published. The lengthy development cycle may prove to be a blessing in disguise, because Polkadot is now hitting its stride at the perfect time. Ethereum has become overcongested, and other smart contract networks are picking up traction. Could Polkadot enter the game with its interoperable network of compatible blockchains and steal the show? It's a distinct possibility. Polkadot's promise of providing high throughput and low fees without sacrificing decentralization could be the key to onboarding users to its interoperable chain, bringing billions of dollars into its ecosystem and helping it become the fulcrum for decentralized finance. With hundreds of projects already on board with Polkadot and development activity growing at 44% a year, Polkadot is on a roll. If it can maintain this momentum, it's reasonable to expect the DOT token to further increase in value beyond the 20% of ETH market cap that it currently holds. Ultimately, Polkadot's value proposition comes down to this. What's the point in creating a bunch of high-tech blockchains if they can't communicate with one another, or require complex bridges and time locks to achieve compatibility? The Polkadot team has set out to create the most scalable, interoperable and secure decentralized network as possible, driving down the barriers to launching blockchain-powered apps, be it for gaming, DeFi or enterprise usage. With the Polkadot network now production ready and third-party developers hard at work, we won't have to wait long to see whether Polkadot really is the future, not only of blockchain, but of Web3 technology. 2021 is the year when we'll finally discover just what Polkadot is made of. Thanks for tuning into this episode of WealthKode Blockchain Knowledge Series. Stay up to date by subscribing and following our pages for all future episodes. And feel free to comment if you'd like us to delve deeper into any of your favourite blockchains, cryptos, or digital assets in future videos. See you on the next episode.